Good afternoon, everybody. Today is Wednesday, the 18th of May, 2011. This is Brian Shannon speaking. Let's take a look at these markets, and we had a nice little bounce back here today from the from the rising 50-day moving average. That is, and we've been kind of flirting with this 134 level lately. That is the level that was widely identified as the neckline of this inverted head and shoulders pattern, and we've been kind of just bouncing along in there. We broke down and below that 20-day moving average, a couple days below that neckline, and here we bounced again today. So the resilience of the market is very impressive. If we take a look at the 30-minute time frame, and then we can put some Fibonacci on here because this is something we looked at in the Monday night video, which was that the 132 and 30 area, 132.30 level, was not only the 50-day moving average, but the approximate level of the two-thirds retracement from the most recent move higher. So we've come down and almost perfectly found support in there and at the 50-day moving average. So if we take a look here together, we can see that the actual level or price, that is, of the 50-day moving average is 125.35. So we got some support there. I was kind of thinking yesterday that maybe we would get a little bit further sell-off down to the 100-day moving average, and I had said in the video last night that it was difficult to find good quality setups, but there were good opportunities in here today. And as long as you're focused on what makes sense for you, and taking a look at not getting off of your game and being sucked into playing something that's not appropriate for you, then that's what you need to stay focused on. And if the market's not identifying the opportunities that you think are right, then you need to slow down and listen to that message of the market. But there were some good opportunities. We'll talk about those shortly here. But let's take a look at the SPY a little bit further. We have a declining 5-day moving average. It's actually kind of flattened out in here now, and seems as though that should be an important level for this S&P 500 to hold up above. We've kind of had this 133. This has basically been the prior level of support, and when we got back above that and through it, we hesitated below the 5-day moving average today, but did close above it. So I think we could, even if we got down below the 5-day moving average tomorrow, I wouldn't think that's a big deal. But I think that about 133.60 is what we want to see hold as support. We can see we broke this little downtrend line from late last week, and on a 30-minute time frame, if we go in and clear these lines off, we've still got maybe a little bit of a potential for resistance from that trend line at the 135 level, but that might be the target where this market's headed to. If we take a look at the weekly time frame, we still have an uptrend on the weekly time frame. So overall, maybe we're getting a little bit of distributive action in here, but so far the market's not breaking down. It's holding that 50-day moving average. It's holding a trend line. It's holding Fibonacci and that sort of thing. So buyers were out in force today with 2,300 advancing stocks and just 693 decliners. And when you think of how many inverse funds we have and that sort of thing, that number's gotten, I guess, kind of skewed over the years. But the NASDAQ did come down to its 100-day moving average yesterday, which was just slightly below the 50. But this market had been in this little range that we've been observing for the last 2.5 weeks. So let's take a look at that on the 30-minute time frame, and this is basically the range that we had broken down below just a couple days ago. So I think that we have the potential now. That is this prior support going to hold as resistance in this level tomorrow. If you take a look at the daily chart, only price pays, but we did bounce on lighter volume, so that's just something to be aware of. We are at that declining 5-day moving average on a lighter than average volume and lighter than what we came down on. So there's certainly the potential for resistance in here. And if we run up a little bit further, I think that this is the zone that should be resistance. If we kind of even take it back a little bit further, these two levels really, about 58.10 to 58.35 has really been the important support here over the last month and a half. So this is kind of like a danger zone that if we can push up through that and hold above it, then the buyers are probably going to have an easier time here over the next couple weeks, and perhaps we'll be able to break out to new highs. That's the bullish what we're looking for here. If we head lower from here, then we're going to have to get a lot more defensive. And with the bigger picture, kind of the weekly that is still bullish, then I think we have to lean towards the bullish side here, but with a healthy dose of skepticism. The Russell 2000 has really been volatile in here, and this market also came down and tagged its 100-day moving average yesterday. So we got back above the 50-day moving average today, but we can see that we have this maybe this head and shoulders pattern in here, and we're back to the neckline. We'll see what happens in there, but I don't think it's necessarily something you want to be afraid of, a pattern. We've got really the Russell 2000 has been really a choppy mess here lately, and continues to be. So the good news is that this could be just more of a consolidation through time, but that 100-day moving average came in and as support right in the same exact spot where we found support in early April. So clearly 81.25, 81.20, let's just call it, $81.20 is going to be an important level. If we break down below that either this week or next week, and in this week we have options expiration day, I don't think we're going to break down below it, but if next week we break below it, then that could signal maybe that we're going to head for the next moving average down near 150-day moving average. So these are things to be aware of, but right now, you focus on the action that's right there in front of you, and with so much indecision, I think you want to keep your trades to a shorter term time frame. And for me, I think that generally means mostly day trades, and then some other ideas with what appear to be low risk, and manage risk as always. Someone was talking about Penson today, and I've got nothing against Penson. I have accounts that clear through Penson, and I look at the chart and I say it's a broken chart, and they're saying, well, it's going to bounce, and that's great. If that's your deal, then you can find some good trades in there. There were good trades in there, and congratulations. But you have to be disciplined and say, listen, if there's the question, for me, there's a couple things I don't like to trade, and I'm generally going to be closed-minded to them. Airline stocks I don't like to trade. I don't like to trade I don't like to trade bank stocks a lot. I don't like to trade any company where there's a question of accounting. To me, I don't know enough from looking at a chart to say, no, some company said everything's going to be okay, and that if you're going to make trades on it, then there's opportunity to make money on it. To me, it becomes noise, and to the person who's trading, my opinion when I write about it becomes noise. The best way to deal with noise, I think, is just to tune it out completely, rather than going and challenging it and saying, no, you're not seeing it right, or this or that. Who cares? That's what the markets are for. If you want to make a bet for or against Penson, we have something called the stock exchange, and you can go make your bets there, and there's no need for argument. It's real simple. But anyways, the semiconductors really staged an impressive comeback in here today. This group broke down through support yesterday, and this was, the NASDAQ broke support first, and then, that is like last week, and then the semiconductors yesterday broke through what had been a pretty important range for it over the last couple of weeks. So it broke below the low end of that support, and I was thinking, well, this is likely to be the beginning of a little bit further weakness down to, this appeared to be the obvious level, this prior resistance at $35 a share, and this 50-day moving average. So I was thinking we probably drift down towards $35 a share, and then then move higher. Well, the primary trend is still higher on that weekly chart. We've been talking about that for weeks, so I'm not going to be short these things overnight. So when they gap down like that, it doesn't cost me anything. I didn't get long these today. I know some people did, and that's you have to look at again what makes most sense for you. If these semiconductors can continue to hold up back within this range, well, then this could be the bigger shakeout. We talked about maybe a failed move, failed breakout that could lead to a quick move lower. That didn't really occur, and we had some volume occur down here. So what happens? What happens is the so-called weak longs get out of the market, new shorts come in, and then when the market gaps back up and we look at it like this, well, what happens to those people who sold short? How does that feel? What happens to the people that sold their long positions? Are they going to chase and buy it back? Well, there's not a lot of supply to fulfill those orders to cover the shorts, because the people who were buying yesterday took the risks and they're not going to let go of them easily. So we get these quick moves higher, and now if over the next couple days we can consolidate within this range and push towards the high end of 37, we have to look at the semiconductors as a potential breakout candidate once again. And that's the way the markets work, and that's why we have to be flexible in our opinions, especially from swing trading type time frame perspectives. That you can't stick with a bullish bias, when it's breaking down. You have to move to the sidelines. That's the smart thing to do. Doesn't mean you can't get back in, and sometimes you get burned on both ends. It happens to every single person, and people say, well, bullish, bearish, whatever, just flip a coin, and it's not like that. It's hey, is it holding the VWAP? Am I going to be able to buy as it breaks away from some resistance here this afternoon? And there wasn't a good opportunity, low risk opportunity to buy semiconductors right here with a stop below the volume weighted average price today. So again, you have to just define your time frame and say, in terms of what's the trend. What's the trend in the financials? The trend is down, right? Last 2 days, though, we're in a nice uptrend. If you look at just the 2-day chart, we've got an uptrend here. So which time frame makes more sense to you? Well, if you're a day trader and you're short the last couple days, obviously you're getting run over. We had broken down below that $15.80 briefly, and now we're bouncing. We're still within that downtrend, but we're bouncing within the downtrend. But a bounce within a downtrend on the daily time frame means that the short-term trend has turned slightly higher. We're above the 5-day moving average. I mean, I wouldn't buy financials. I know some people are, but to me, they're a damaged group. To me, I want to go where the easier money is. And someone will say, well, why were you trying to short the why were you trying to short the IYR yesterday? And that's a fair point. As I explained, and I'm getting a message. Nope, it's fine for Sean. So I'm going to assume it's fine for everyone. Somebody needs to refresh. But why was I trying to short the IYR yesterday? Good question. I thought it was very similar to the Qs break. The Qs, the Nasdaq broke this support and dropped to the 50-day moving average. That the semiconductors, that's not the semiconductors. The semiconductors had broke some support and looked like they were continuing lower. And I looked at the IYR and figured, hey, all these other groups are breaking support. If this market breaks, I'm going to get short. Well, I was short briefly yesterday, and I think it was right around in here as it rallied back up to volume weighted average price. I had mentioned later on the day that I had gotten out basically at break even, and last night I was telling subscribers we would revisit this as a possible short sale if it broke down below $60.50. In other words, we wanted some momentum to the downside before, so it didn't cost anything, and it wasn't an all-out bearish call, but I was thinking, the rest of these markets are breaking down towards the 50-day moving average. This has been bulletproof. It's been in this giant uptrend. It still is in this giant uptrend on the weekly chart, but it looked like something that possibly, if it broke some support, it could continue down towards the next level, and it shouldn't cost you anything. So, again, you have to look at what's the timeline, what's the rest of the market doing, and adapt to what the market's giving you. Silver is continuing to bounce around in here. I've given up on trading silver. I think it's just it's become too gappy and just not enough volatility in there for me. I got taken off track. 2 weeks ago with silver, and now it's something that I'm not really trading. I think, again, I'm going to repeat that if they don't scare you out, they're generally going to wear you out when something collapses like this. The stocks that I put on that video that I tweeted earlier, they're on the homepage of my site right now. These are stocks that I told subscribers last night. Hey, we've got what looks like an environment where there aren't a lot of opportunities, but let's keep a look at these trades tomorrow, that is for today, because they look good technically. And a company like Cincinnati Bell that trades 1.5 million shares, the prior resistance is holding its support here. We've got a rising 10, 20, and 50-day moving average. We've got what was a breakout here that looks like it could potentially continue to run up towards maybe $3.50 a share. These, I guess it's a baby bell, right? They're not the most exciting stocks, but I still think it could get up towards that 3.5, 360 level. But what I was talking about was we need momentum before we decide to enter the trade. That what we were looking for was, what I was really looking forward for today would have been really something like this, and then to get involved as it's either breaking the resistance, or once it comes up to that resistance, creates a higher low, get that 5-day moving average kind of flattened out, and then buy the upward momentum with a stop even just underneath that level, not necessarily down below that 310. So I think that this is still a good potential upside trade. That we've got this prior support at 323, which did hold as resistance. So you have to respect that level and say it's going to need to at least get back above that resistance. That's where there's sellers right now. It used to be defended by buyers. Now the sellers are in there saying, we're taking control at this level. Well, if the buyers come back in and push it up through there, then I think it's a decent bet with a worst case stop below, right down about 308. Hopefully it would do what I said, which is instead of just, let's just say this is tomorrow and we closed right here. So tomorrow I'd like to see maybe it rallies up to that 322, 323, backs off a little bit, and then gets moving higher, and then to probably buy it right here or as it breaks the resistance, depending on, was the volume big as it got up to that resistance level. And there was a good example of this from last night's video that I was talking about, and that was Volcano Corp. Volcano Corp, we'd been watching this one for about a week and a half, and kind of on Tuesday, it recovered. It gapped down and recovered nicely, back up, and it came up to this level where it's found resistance numerous times, $28.11. So it came back up to that level, and then it pulled back, and that was great. What I didn't want to see was it continue to move higher, because then where would my stop have gone had I purchased it there? So I prefer to be very conservative. I like to see the pullback and then buy the strength. And this was a great trade here this morning. It was totally buyable in this range, and then it got that volume. There was a big block that occurred actually before the stock really moved, and then a bunch of people like myself piled in, and I think it's a level a lot of people were looking at. So that was a nice momentum move in there. It got up to the daily R2. I sold a little bit in there, sold some as it came back down, and then bought it again right here after it touched the volume weighted average price and began moving higher, and then mentioned to subscribers that I'd sold half of it right there, and I'm still in a little bit of this. But Volcano Corp, right now my worst case stop is going to be underneath this afternoon's low, so about $28.10. And is that the best place for a stop? For my personality, it is. If it goes back below that level, I'm not interested. Maybe it goes 3 cents below there and runs higher. That's what happens in the market. Now, what I was saying is, the buys that I like are it comes up to that resistance and then backs off and then pushes through. So if you listen to that video from yesterday, I was talking about Forest Labs. We were talking about Forest, and what had been the 2-day volume weighted average price was right here at $34.65. And I said this is the level it probably really needs to get above. If it can get above that level, that's where we want to buy it. But what I said was, and this is why I didn't buy the stock, that I didn't buy it here because I thought, well, it's just it's just come from $34 to 34.65. I would have liked to have seen a little pullback and then a push higher where I either buy it right here or I buy it right here as it's breaking past that 34.65 level. Well, this stock didn't do what I was hoping it would do, and that's what happens a lot of times in the market. So how often do you decide I'm going to break my discipline? I'm gonna chase the stock there. It would have worked today. It would have worked great because it really never even ticked down. So I didn't get involved in Forest Labs. I missed Forest Labs, even though I've been liking this daily chart for a while. It's got a good looking weekly chart, but you have to stay true to what works well for you and ignore the noise. And that's what I meant with that ignore the noise tweet earlier today. There's a lot of good people on Twitter with different strategies than what I do, and they'll make money with a strategy or a stock, and I'll look at it and go, you know what, I just don't feel comfortable with it, so I'm responsible for my results. I'm not going to take action here. And that's where no one makes all of the trade. No one can make all these trades, but it was a good, well laid out trade. Some people I know, subscribers of mine did buy there, and if that's the way they view risk, then that's the way they should do it. You shouldn't listen to anyone who just tells you here's what to do it, and that's black and white. You have to make each trade your own, regardless of where the idea comes from. Whether you get it on Twitter, a chat room somewhere, or if you get it, just by combing over annual reports or looking at a million charts. At the end of the day, they all become your idea, so you have to accept the responsibility and accept or say it's not risky or too risky for me. Dril-Quip, DRQ, here's a stock that's below a 10, 20, 50-day moving average, below 200-day moving average. It broke down hard recently below some support. And I was looking at this last night saying, it still looks vulnerable. It's in this little pennant here. This is looking like a bearish pennant. Let's keep an eye on this one for potential downside. I'm saying that it was tough. Recently the stock has been pretty choppy in here. A lot choppier than what I really like to trade. You can see all these big movements, but I said maybe getting below 66.50 would be the place to sell it short. Well, what happened with this stock today obviously was it gapped up a little bit. It never broke any little levels of intraday support from yesterday and ran higher. So this is a stock that it was on the watch list for a short sale candidate, but there was no reason to get involved in the stock on the short side, especially when it spent the entire session or right up till the end, the end of the day, above a rising volume weighted average price. So again, make each trade your own and look at them as, hey, these are potential ideas. The CBB didn't trigger. FRX, you could have made money with it. IYR, it didn't trigger. There was no reason to get involved. Here was another one that was set up very similar to Volcano that I traded this one as well, and this is our Donnelly. I was talking about, the weekly chart looks, it's got a great pattern in here. It means higher highs and higher lows. My one concern was that are we buying it late off the weekly chart because it's already experienced one of these runs, and I don't like to buy them after they've made a run like that. But when you drill down to a daily time frame, you can see it came with 2 big days of volume and it consolidated in a real tight range above a rising 10, 20, 50, 100, 200-day moving average, etc. And it came down, kind of flirted with that 5-day moving average. And here on the 10-minute time frame, you look at this one, we were looking at this one above $25 or $20.53. That was these highs over here. You could have cheated and bought it a little bit early if you wanted to, but at that point, and here's what I liked about this setup is to buy it at $20.53 and to set a stop underneath yesterday afternoon's low right here. That's where my stop was that was going to be my exit, $20.30. The worst case stop I think would have been below the lows of this recent consolidation, so probably closer to about 20 and a dime, or this, just below this little low right here. But the nice thing is when they work like this, when you buy them and as soon as you buy them, they just they take off nicely. And this one actually didn't even do that. It ran up a little bit It pulled back just slightly in there and then took off and closed very nicely here at the end of the day as well. So held above that volume weighted average price all day. Kind of had this little sell off. I don't know what that was all about at the end of the day, but I'm still involved in a little bit of that. And I would say the stop in here at this point would be at about $20.65. So you get involved where the momentum begins. You take a little bit off as it rallies, set your stop underneath the next higher low, and let the market do the rest of the work for you. And hopefully it can continue with a pattern of higher highs and higher lows. So we're getting rotation still. I'm not seeing any rotation out my window, but that's interesting. It is storming pretty good here right now. So maybe I should attend to that. I don't know. But let's see, what else did I want to talk about? I guess the only other one I was going to talk about was soda. Soda was a huge winner today, and last week when I was talking about this stock, I was saying it's set up. It's it's kind of a squirrely stock. You have to trade small share size, and I had some options in it. I almost sold them. I don't know why I didn't actually. Usually I would sell them, but this was I sold half of the options right on the open here today. I sold some more here and then more at about that level. But soda, big breakout on earnings, and it was an earnings bet. That's not my typical play, but they are good to do sometimes. So anyways, I think I'm going to cut this broadcast out and take a look out the window. It's pouring out there. We're getting some hail. I don't know if this is the beginning of something big, but thanks for tuning in, everybody. I will talk to you on Friday.